Hello and welcome to CMC Markets Weekly Trading Outlook. My name is Colin Szyszynski, Chief Market Strategist. For the week of July the 13th, there's just so much going on. I'm going to jump right in, but there's a huge amount of things happening that could influence trading. So let's start off with Greece. I'm sitting here on Friday the 10th, and so far markets are having a pretty good day. We've had a particularly strong rally in European markets, and the U.S. markets are up at a more moderate pace, which is to be expected because the U.S. markets didn't go down as much either. Same with the FTSE. They're trading more in line with the U.S. than the rest of Europe today. So Greece has put in a proposal with the help from France, and now we're waiting to see if it'll be accepted or not, and will there be any how much more money might be given to Greece? Will there be any kind of a haircut on their debt? What's going to happen? Still all up in the air. There's still a parliamentary vote set for Greece. There's conference calls among creditors. There's a meeting of Eurogroup finance ministers on Saturday, and a big EU summit scheduled for Sunday, which it looks like the day where this could all come together, either a yes or a no, either in or out. And then, so based on how that all shakes out, and it's still really, as far as I'm concerned, still up in the air at this point, but depending on how it all shakes out, we could either have a Greece in and a move on that, or Greece goes out and markets react to that. But at least, hopefully, now some of all this uncertainty will go away and markets can deal with whatever's happening wherever the chips manage to fall. So I'll just show the DAX here for a minute to kick things off here. We had a downward gap here around the when the referendum was called. It's been trading lower. Now we had an upward gap here, broke out of a short-term downtrend. This isn't really an island bottom, but we are starting to see gaps showing some pretty significant moves. RSI back above 50 here. So far the people are looking a little more encouraged. This is 11,180, 11,000 down here, and this next one's 11,425, 11,645 on the upside. So it looks like it's trying to turn around, but it still has some work to do. We'll have to see how things go. Similarly, if we pop over and look at the euro dollar here, and we'll see that just looking by the way at the client sentiment, the client bearish positions have been dropping a little bit against euro dollar. So there seems to be some encouragement here as it did break out of a downtrend. It lifted up off 110 through 111.11, where it's been testing as new support. RSI looks like it's trying to turn upward but has not cleared 50 yet. We do have a bit of a spike here. It wasn't able to hold it. Now, if we're looking for levels on Monday, there's 110. That's 108.60. This is 111.11. 112 even and 112.85. So we could see some swings within this range. And up here, by the way, is 114. So we could see quite a bit of action in activity in euro dollar in particular to start the week, depending on how things go over the weekend. So there's a lot there. It's still I think the odds of a deal have gone up a little bit, but it's still not 100% because Germany's still saying no haircuts. So if we'll see who rules the day now. But the other important thing to recognize is that coming out of all of this, regardless of what happens, we are starting to see some fracturing within the EU, where France and Germany are no longer marching in complete lockstep. They're starting to diverge a little bit. Other countries may be looking to try and renegotiate their own deals down the road, depending on as elections play out. And the UK is already looking forward, and if some of the Eurosceptic parties get elected. So suffice it to say that no matter what happens with Greece, this is the beginning of a period that could be more uncertain and volatile for the EU as a whole. So we may continue to see volatility in euro dollar going forward over the coming months. Next thing I wanted to talk about is China and the crisis in China. I'm going to show the Hang Seng here, and so what we had here, massive rally back in March and April. We've unwound it all now. We've come back. We've gotten within striking distance of the 52-week lows. RSI that was way overbought has now gotten way oversold. So it would seem this correction was close to running its course. And then, of course, the government got involved, and they started halting stocks, and they started banning sales from large shareholders and insiders, and they started threatening to arrest short sellers, and so what have we gotten off of that? Well, the selling pressure has dried up, and markets have bounced back a little bit. It's going to probably take some time for markets to find some kind of a new equilibrium. This is like throwing a ball off the roof of a building and hits the bottom and goes boing, 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 and so as we go, so it may take a little while, and we may still see some significant swings up and down over the next few days. What could trigger moves in China this week is we have quite a bit of data coming out. We start off the week with the trade balance, but more importantly, midweek we get the GDP, retail sales, industrial production, but second quarter GDP also significant. For people looking to see, is this going to how's the economy going? Is it still sluggish, or is it showing any kind of a rebound? It's probably going to take into the third quarter before we figure out if this market crash is going to have any wider reaching ramifications on the Chinese economy, which is what got people so upset in commodity markets. The question is, could this destabilize the economy? It's still early to say, but we'll see. But we'll be watching the Hang Seng certainly, and also the Hong Kong China H, which also shows the volatility. Same kind of thing where it was generally working steadily higher, had a huge launch. It's funny, 11,500 to 15,000 is 3,500 points in the matter of a few weeks, and nobody complained when the market was going up like a rocket. But of course, when it comes crashing back down again under its own weight, then people get upset and people get hurt. So it's well, even here, I mean, short sellers do. It's a little different. But anyway, suffice it to say, we've got, look, I mean, we had the double top here. It rolled over, and we've hit this low here around 10,725. You weren't that far from the 52-week low around 10,300, and now you're starting to rebound. So whether it's a technical bounce, a dead cat bounce, the government initiatives actually working, hard to say. But anyways, I used to say we'll probably see this one stage some fairly large swings through here over the next few weeks as well. And as these two twin crises play out, one market that's where you could see action in as it goes is the yen, where when during times of fear and crisis and volatility, capital goes in. When if fear is eased, capital goes back out. So I'll start with euro yen, which has actually rallied today with the euro, where it had been the euro had been improving through April and May. Then through June it started to weaken and into July as the Greece crisis came about again. Double top here has come back down, had gotten close to oversold, has popped back up to 50. This has broken out of a downtrend. This was 135.15, 135.55. First resistance 137.90. And then this zone of congestion here between the 140 round number and 140.65. So still some room for some significant moves in both directions, depending on what happens, of course. But we could see some volatility in euro yen. And if we come down and look at dollar yen, which is the classic haven play. So euro yen could act more off of what happens with Greece. Dollar yen likely to act more off what happens with China. If China continues to stabilize, then we could see here as we have the yen weaken off a little bit and the dollar rebound against it. So we saw here overbought, got oversold back up to 50. Looks like it's starting to turn upward again. Big rally here. The spikes above 125 didn't hold. It was smacked right back down. Had been drifting lower. Supports kicked in here about 120.50. We're back up around 122.50 to 122.80. Then resistance 123.25, 124.25 on those Fibonacci levels. And moving on now, so we've looked at Greece and China. Next, I'm going to talk about crude oil. Crude oil is getting impacted by a couple of things. The first of which is that it had a really nice rebound here, coming up off its lows. And let's go to a one-year chart so we can see this better. So big, massive decline for crude oil. Then we had a nice recovery here from $42 up to about $62. The sideways trading range where it was topping out for a while through May and June, consolidating after it got overbought here, and then started to roll back down again. So multiple factors why it could roll back down. There's the IEA saying they think oil demand could fall in 2016. There's a lot of people thinking if China or EU destabilize and their economy slows, that could cut demand for energy and for resources. Plus, there's always the question of what are the U.S. producers going to do? There's now talk about refracking and going back in to some of these old shale wells and fracking them again to cut costs and try and squeeze more oil out of these formations. So the just as the OPEC has not cut its supply, in fact, they've taken advantage of this oil price crash to try and steal market share and squeeze the U.S. producers out. The U.S. producers now are in a position where they could start to respond and find ways to ramp up their own supply at a lower cost. And so that probably means that this rally in crude oil is likely done unless there was something major happen. And we'll probably see a drift back here, and it could trade in this 50 to around 50 for a while. Low 50s, mid 40s, say 45 to 55 could be its next trading range here. Oil is oversold in the near term, could go sideways here just above 50, but that 45 to 55 range is where I think it might be drifting back into. The other piece that could actually cause movement, a significant move in crude oil, is also the Iran talks, which are ongoing. They've passed their an initial deadline, so that would have given them a short congressional review. They now get the long congressional review, and but apparently the last I've seen they're still talking, so see if anything comes of this. If they reach a deal that lifts sanctions, then that lifts supply into the world market. If the whole thing falls apart, then Iran stays out under sanctions and can't export, so that reduces a potential bump in supply out of the market. So we'll see how things go with that. But generally speaking, steps toward a deal, probably bearish for the oil price. If it collapses, would likely be bullish for the oil price. Next thing I wanted to talk about was Canada and the Bank of Canada. There's actually, on top of everything else that we've got going on, there's 3 central bank meetings this week. There's the Bank of Canada, there's the ECB, and the Bank of Japan. Bank of Japan's probably not going to do anything. All we want to see from them is, are there any, they've had one hawkish dissenter. Do they remain hawkish? Are they joined, or do they back off? With the ECB, a lot of what they do could come out of what happens with Greece. If there's if things get settled and it looks like there's going to be stability in the Eurozone, the ECB probably won't have to do anything. If, on the other hand, things start to go off the rails and spiral out of control, then the ECB has another shot at their regularly scheduled meeting to take some kind of action if necessary. But the one that's most interesting is the Bank of Canada, and I'm going to bring up the Canadian dollar to show what's going on here, and we'll use US dollar CAD. So, the U.S. CAD has been kicked around by a number of factors, most of which are related to, mostly it's been tracking the oil price, but on top of that, we also have the people are wondering, speculating on, what does the oil slowdown mean for Canada? What does it mean for the Canadian economy? And there's 2 ways of looking at this. There was the initial short-term impact where the crash in the oil price costs a lot of jobs in the oil patch. However, over the longer term, the lower loonie makes it improves the economic conditions for other parts of the Canadian economy and other regions in Canada. So, and that can improve the Canadian economy. So you get a rebalancing between short-term pain and long-term gain. And the question is, where do you hit the crossover? So, today the Canadian jobs report came out, and it didn't look very good on the headline number. It was a 6,000 decline, but there was a 65,000 increase in full-time jobs, a 72,000 decrease in part-time jobs. So you've had a huge shift from part-time work to full-time work. That's actually a good thing. That's positive for the economy. And the manufacturing PMI for Canada released over the last week or so was reasonably decent as well. So there's a lot of factors kicking around, and the big question is, will the Bank of Canada cut interest rates this week or not? The last time the Bank of Canada cut interest rates, they went a month after Norges Bank. So Norges Bank cut in September, and Bank of Canada cut in January. Canada and Norway, 2 oil-sensitive economies. Norway, however, now is gone, and they cut interest rates again in June. So a lot of people are speculating, does that mean the Bank of Canada could cut rates in July? Well, it's hard to say. But if you look at the employment growth, it would suggest that there's no reason for the Bank of Canada to cut interest rates. The loonie is way down at it's up here at $1.28 on US dollar CAD, and if I show CAD US dollar, it's below 80 cents. So we've certainly, the Bank of Canada has, the Canadian dollar decline has done a lot of the Bank of Canada stimulus action for it. Though the cheaper currency does act as a stimulus for the economy, a falling dollar is equivalent to a rate cut. So based on that, I don't think the Bank of Canada will need to cut interest rates here in July. However, they may hint or leave the door open to further rate cuts if things were to things were to go downhill through the rest of the summer. But so far, I don't think there's enough bad news about the Canadian economy to do it. Even though GDP was a bit soft, I'm not convinced that Canada's gone into a recession either. So we'll see what happens. But I think we're working through a transition, no question. I think some regions of Canada may have gone into recession, no question. But on the national level, I don't see it. So I don't think they're going to cut. But we'll see what happens. If they cut, then the U.S. dollar CAD could continue to rally. It is bumping up against channel resistance here around 128.10. Is getting overbought in the RSI. If the Bank of Canada holds steady on interest rates, we could see this come back off a little bit. It's trading around 127. First support 126.60. Then that's 126 even. 125 even, the round number. 50-day moving average is down here at 123.33. So there is some room for the Canadian dollar to come back off. Now, I guess the other piece we'll want to just talk about briefly is U.S. markets. And for this week, the things are a little different with the U.S. There'll probably be less of a focus on monetary policy and more of a focus on corporate earnings. Earnings week does kick off in earnest this week. On the week just ended, we had Alcoa report they missed. This week we start to see more banks, more industrials, some of the big tech names as well, starting to report earnings. So what are people going to be looking for from U.S. earnings season once again? U.S. dollar impact may not be as much this time around because the dollar did actually level off. Similarly, the price of crude oil had rebounded. So the question is, how does has there been any disruptions in Europe or in China? And of course also what about the U.S. recovery? We'll be looking for talk out of that. Did the U.S. Was it a strong recovery in the second quarter, a sluggish recovery in the second quarter coming out of the windows? It seemed a bit soft, but we'll see what the corporations have to say. And of course with their guidance, what are they thinking now for the second half of the year? So that could keep U.S. markets particularly active. So we'll just show the Dow here, the US 30, and show that we've been in this big sideways trend here. Yeah, some of you could measure it from December, you could measure it from February. Measuring from December, we're 1, 2, 3, 4, 5, 6, 7, 8 months in to this, and from February, it's beginning of March, it's 1, 2, 3, 4, 5 months in. So these things are usually 9 to 12 months, these sideways consolidations, which you often get in the middle of a cycle, and we're about halfway through. We're working our way through the middle innings now. We're getting close to the seventh inning stretch, and basically that's what where we're at. So the question is, if corporate earnings are good, they can provide a floor underneath the markets. If corporate earnings are poor, we could see them weaken off a little. Markets continue to weaken off towards the lower end of this channel. This bottom here, 1725. This top, 18360. That's over 1,000 points. And RSI here has still been drifting lower. It's got to get back above 50 to signal an upturn. This resistance here, 17,777. This is 18,000 in the 50-day moving average. 200-day moving average is 17,730, and so we're going to be watching that. Higher lows here. We're encouraging this doji here, however, was not very encouraging. So we are getting some mixed signals from the US 30. We could see markets heading both ways. So another huge week for news. It's going to be really busy, really active, and there's a lot of potential for trading this week. There's a lot of potential for swings that could be in both directions. So another week for traders to be nimble, but there could be some things out there for the people that are looking for them.